Hello, welcome to European Open Briefing for Thursday, January the 17th. I'm Rafi Boyajian, currency analyst at xm.com, and we're going to be taking a look at what's happening in the currency markets today. So we're seeing some subsiding of that risk appetite we saw since the start of the week. There seems to be lack of direction for investors. Equity markets are mostly in negative territory this morning, although we did see a positive close on Wall Street overnight. If we do see strong earnings results coming up later today, potentially from companies such as Netflix, that could possibly lift market sentiment later on. For now, though, we are seeing risk-sensitive currencies such as the Aussie and the Kiwi fall against the US dollar. The loonie is also down. We did see oil prices coming under pressure from yesterday's big jump in US gasoline stocks. The euro remains under downside pressure. It's hit fresh lows against both the dollar and sterling. Sterling itself slightly pulling back from those highs yesterday when it rose after Theresa May won a vote of no confidence in Parliament. But there are some concerns now on trade. We are seeing some headlines regarding US lawmakers taking action against Huawei, the Chinese telecom company. The dollar index, we can see it's moving back towards the 1.5 week highs of earlier this week. And although we did see some positive headlines in recent days on Chinese stimulus as well as on progress in the US-China trade talks, we are now, there's the latest news is that US lawmakers have proposed a bill to ban the sale of US chips and other technology to Huawei and other Chinese telecom companies for violating US sanctions. There's also a Wall Street Journal report saying that the federal prosecutors have started an investigation on Huawei for stealing trade secrets from US companies. So that is weighing on risk sentiment, and the Kiwi appears to be the worst performer among the risk-sensitive currencies. It's down by around 0.6% at the moment. We did also see weak retail sales numbers, electronic card retail sales numbers earlier this week, so that's also somewhat weighing on the Kiwi. Plus, there's also worries that next week's quarterly inflation data out of New Zealand will be on the soft side. So that again could potentially raise the prospect of an RBNZ rate cut. Let's now move on to European currencies. The euro, we can see, is down against both the dollar and the sterling. It's hit a 2-week low against the dollar 1.1370 and a 7-week low against the pound at 0.8837 as concerns mount about the strength of the Eurozone economy. That doesn't seem to be any good news coming out in terms of economic data for Eurozone countries. Sterling, though, is steadier this morning. Of course, we had that news that Theresa May survived that vote of no confidence, and now she's started cross-party talks to try and reach consensus on how to proceed following the voting down of her Brexit deal. But there are doubts as to how far she's going to be able to go, as Labour leader Jeremy Corbyn has said he will not join the talks unless Theresa May rules out a no-deal option. But investors don't think a no-deal option is a likely scenario anymore, so that's what's been driving the pound higher in recent days. And most likely outcome now is seen to be an extension of Article 50 to give more time for Parliament to reach a decision. That's it from me. Thank you very much for watching and have a great day.